Good morning, everybody. Alright, so we have news at 7 Pacific Standard Time. So gotta adjust something real quick. Alright, so yeah, we got something at 7 o'clock. Why is this not showing? Hey, can y'all let me know if you could hear me real quick? That'd be great. Alright. Alright, so let's get started digging into some of the things that have actually changed. There's some stuff perspective wise that I think I'm going to make adjustments on based on what the bonds and the yields look like they're doing. Something that we talk about all the time. Let me just adjust some things. Okay. All right, so we got the DXY. We got the DXY basically respecting this weekly inversion fair value gap, the midpoint of that. Let me, like I said, go to the yields real quick. So we could see how the yields basically, well, the bonds basically fell lower, aggressively attacking the sell side here. It did reach into the fair value gap that I pointed out as a possibility. Of course, for the DXY to be bearish and then us to continue being bullish in the indices, we would have liked to see this hold here with this SMT that was here, because it was SMT between the lows here. If we flip through, this is the 30-year bonds. Here's the 10-year. Okay. And then here's the 5-year. So the 5-year had a lower low, and the other two had a higher low. So that was signifying potential strength using the S&T. But obviously price has not wanted to respect that. So because that's the case, we have to consider the fact that DXY, also with the fact that this is expanded just like this declined, the yields expanded higher. The DXY follows the yields. So if the yields are going to rally, if this continues, and it didn't respect this SMT we pointed out the other day also, then we'll see price continue to go higher in the DXY as well as in the yields. And you could see how the target here was this weekly high. And that's basically been purged. Those equal highs here too. So that liquidity has been engaged. If we go to maybe the weekly, get a view of that real quick. So one thing to consider too, there's no news until 7 a.m. Pacific Standard Time, which is 10 a.m. Eastern. So we have to wait. We don't trade the 5:30 open. We're going to have to wait and kind of see what price is going to end up doing as we move into the open. So yeah, so yeah, coming back to the yields and the bonds. So the bonds pretty much, again, have fallen. They've respected this order block here. We pointed this out in the private community, like I want to say like a week or so ago. And we wanted to observe the reaction we had from this weekly order block to 2-week order block, right? Technically, we can go like this, use the low of it to the body, but it basically hit the body beautifully. Okay, and we've seen the reaction lower. So if you zoom out, also, we can also see, can also see how there's relative equal lows here. Okay, and that's a monthly low. Price just literally looks like it rallied up to go lower. It's behaved in that manner, going up to just go lower. Okay, so we're also, like I said, respecting this order block and this fair value gap. So there's many indications showing that we're going to still continue to be bearish in this market. There was SMT that would have possibly changed the whole dynamic if it would have held and continued to go higher, but that's obviously not the case, right? We also have relative equal lows here. And then we also have, on the daily chart, we have a fair value gap and a volume imbalance that could still be fulfilled. So again, price basically looks like it went up to a premium, ran out buy stops. Now we've shifted market structure lower. So I'm going to try to see if we can see this midpoint of this be respected as well as this low for us to frame out continued lower prices, given the fact that this SMT failed. And it looks like obviously the yields are going to obviously go higher too from what we're looking at, what we see currently. So we want to observe and see if there's going to be respect to the fair value gap here, as well as these down candles, which I'm assuming is an order block. Yeah, right here. It's an order block. Drag this out. So I'm assuming this order block is going to hold. So as price continues to do what it's doing, we've basically mapped out this order block here. So what would invalidate this? Well, where are the 3 PD arrays? Right? Well, there's this weekly inversion fair value gap. We have this order block, the midpoint, and we have this swing low. So unless that breaks, if it breaks through this weekly order block and gets below it and then closes below the midpoint of this order block, then our narrative would change. This literally looks like it just retraced to a discount, swept out liquidity, and then has aggressively turned around, while this has basically shown weakness. So that confirms a potential idea for price to go higher if we stay above inside this weekly inversion fair value gap. So if that's the case, what are our draws on liquidity to the upside? We have this high here. Remember in the other call, I gave you guys the list of liquidity pools. So previous day's high, previous day's low, previous week's high and low, previous month's high and low, any higher time frame PD arrays that are in close proximity. Like those are all relevant in terms of framing out a narrative as far as, you know, something that could support a bias, right? So prices basically came off of the low after taking liquidity, kind of left equal lows here actually in this chart. So we have to see what it's going to do inside this fair value gap here, this weekly fair value gap. We're also inside this fair value gap. So if you take that, you split that in half, it's also at the midpoint of this fair value gap. We have not closed outside of it, and the bonds and yields are promoting us to potentially go higher. That is, of course, unless this hits this fair value gap, right? And then all of a sudden, they just start tanking off the face of the earth, right? And then this turns around potentially. But I don't think that looks too convincing. Well, it looks convincing now because there's a shift in market structure, because of the reaction we've had at these highs, how the SMT bullish basically failed. Because of that, and the fact that now we can obviously identify some equal lows down here that are pretty significant from a while ago. And the fact that we were traced up to a premium and have basically rejected aggressively away from that. I'm under the assumption that maybe we're going to come up and finish the rest of this weekly fair value gap on the yields, and then in turn we would end up potentially chasing down here. That would all indicate bearish indices and bullish DXY, because DXY follows this market, the yields, right? So with all that being said, now we move on to what are the indices doing, right? So we have the NASDAQ basically taking the high, or it basically took the high. We also, of course, have this, which we saw, this large SMT. We saw a fairly large drop, and now it seems like, from what we've just discussed, how DXY looks like it may turn around and be bullish. Looks like we're going to probably try to seek these lows here and potentially get down into this monthly order block, monthly bullish order block, as well as this fair value gap here that has some room to be filled in. And whatever price does down there, if it hits that and then decides to try to aggressively run higher, that could be dealt with at a later time. For now, right, this looks like it's ready to want to fall, potentially attack these lows. That's also confirmed if we close below the midpoint of this order block here. And then the target, obviously, and the narrative, obviously, would be us aiming for these lows and this fair value gap. So that's pretty much what I want to see, honestly, given the fact that the indices are literally, or at least the Dow is looking like it's wanting to fall. And then the yields and the bonds are kind of showing us potential signals that the yields will want to go higher and the bonds will potentially want to continue going lower. That's not to say that this can't retrace back into this order block, back into this fair value gap, and then look to fall. That's not to say that that can't happen, because it can. Right? Seems like Tuesday set the high of the week. Right? Price opened on Sunday, rallied up, hit the fair value gap, hit the order block, and then basically tanked. So we're going to see what this is going to do. Right? If we break outside of this fair value gap here and then start attacking this high, then of course we have to consider adjustments. But for now, we want to observe, because multiple things are showing that the yields are going to go higher, the bonds could go lower. That translates directly to us seeing DXY want to come and maybe attack this trendline liquidity here. And then maybe have a draw on liquidity being previous week's high. That's the most near term. And that's also Friday's high, I believe, yeah. So that's near term. We've already taken Friday's low. We've already dug down, showing respect in this inversion fair value gap. The midpoint also showing respect in terms of this fair value gap. Right? It's respecting the midpoint of that one as well. So, with all that being said, I want to see us potentially try to attempt to get up here. If everything stays the way it looks, and the yields continue to go higher and the bonds continue to go lower, we will definitely look to target the highs on DXY, and then that will basically show us in the indices that we're looking to potentially fall using this SMT that we pointed out like a week ago. All right? So that's essentially the narrative. So, because that's the narrative, we want to try to paint things that go alongside that, right? Bearish indices, bullish DXY. So what you'll notice here too is we have this big wick here. We have this fair value gap as well. So measure out the midpoint of that fair value gap. Measure out the midpoint of that wick. We want to see price get above that on its way to potentially attacking this. Notice how price opened. This is Sunday. This gray area, that's Sunday. They're all different weeks, right? It's an indicator that splits up Sunday, or visually shows you, so you can be on the daily chart and know where Sunday is and where each other week is at, so you can identify previous week's highs and lows very, very easily, because it's that important, right? The list of liquidity I gave you is very important. But yeah, you can measure out this wick here, find the midpoint, measure out this fair value gap here, draw it out, find the midpoint, and we want to see if price is going to continue going higher and going to be trusted to go higher in the DXY. We want to see it get above that and not really show much like rejection. We want to see it slide through. Pop is probably going to occur, like I was saying in the other call, It's probably going to occur when one of these news events comes out and gives it institutional sponsorship. Because remember, if you're looking for something on the higher time frame to deliver, generally that delivery and price is going to occur when one of these news events comes behind it. Because just like macros on the 1 minute or lower time frames, how there's a timing element to that, well, this gives you all the timing elements as well, in terms of, when a move could potentially occur. Right? Because this is like a menu, right? Showing you when institutional sponsorship will likely come into place. And we need that if we're going to catch large moves, right? Or if price is going to move at all. It doesn't just move because you and me take a trade. So yeah, we have this high here too. If we observe the high there. So if we look at these highs here, I mean, there's a larger range, SMT obviously. Trying to see if there's SMT between those as well. It's 22nd. Yeah, so there's also SMT here too, right? This one made a higher high. This one made a lower high. So there's double layered SMT divergence bearish, and we could see the reaction that Dow had specifically. So again, I see this retracing, and then the question may be, what if it comes down here and reverses? None of that matters right now. What matters is where's price going right now, right? Or where could it go if it was to want to rally? Where's liquidity for it to come and sweep up so smart money can reposition at a discount, at fair value? Well, there's SMT at the highs. We've been really, really bullish. So it's not unreasonable if they did want to come down here, reposition or unseat these traders to then continue pushing price higher if DXY was to eventually end up going lower. For now, we're going to trust the fact that this potentially could be the draw on liquidity, and then the fair value gap down here could potentially be the overall draw on liquidity for the week. It's the higher time frame, right? We got Friday's low. Before we get to this low for the previous week, we have this Friday's low. Keep in mind too, we're still trading inside of last week's range. All right. So we have liquidity below here, which is a previous day's low. We have liquidity below here, which is a previous week's low. We already took out Friday's high, failed to take out previous week's high, and left it there. But price is seeming like, wants to try and attempt to get down there, right? And attack previous week's low. And then we have another, Another, like, Friday's low, which is from 2 weeks ago. So again, I'm assuming that price may want to reach down and attack down here. Now, if it respects this and totally disrespects that, then it disrespects that, and we have to keep in mind that the structure here is still bullish. So this is still a counter trend idea for the time being. So you'd have to drop your risk. At least I'm going to drop my risk. That's just how it goes. Until it's, completely showing we have now changed sentiment. Now, if we're talking about the Dow, that's a different story, right? This looks like it completely changed. And that could be giving us insights as far as whether this is going to be continuously falling in the near future as well. But these are all just things you have to consider, things you have to think about. You can't be on the side of, I want to change my overall higher time frame bias entirely all the time, because that's just not how it works, right? Like, overall narrative doesn't change day to day. Daily bias and draws on liquidity do, but the overall narrative, the overall draw on liquidity for like the higher time frame, like monthly, weekly, those don't change on a day-to-day basis. The daily bias changes. The near-term, lower time frame draws on liquidity on the way to that higher time frame narrative and draw on liquidity. That can, it can vary sometimes because you have all that, the list of liquidity that I gave you, like all those lists or all those different elements and different pools of liquidity that can be utilized within that higher time frame narrative that we're trying to paint, right? And that's where people get stuck with bias. That's where they get stuck and think, oh God, I don't know what I'm doing, because they think weekly and monthly bias is going to change every single day, when it doesn't. You need to learn to stick to your bias that you paint, right? If this is the draw on liquidity, and that's my assumption, I want to stick to that until I'm proven wrong, right? Until this bullish trend is broken, which would be basically getting below this fair value gap, below this low. Until that happens, I'm looking at this as a counter trend sell. But if that is to occur, then of course I would change sentiment and try to go verify with all these other things we've also discussed. Like, are the yields in the bonds confirming? Is the DXY confirming? What is the currencies doing? Are those confirming as well? Because if DXY is bullish, that means GBP and Euro should also be dropping and going bearish, right? So you got to mix these things together, and then eventually you get a big picture of things. And again, it builds trust. It builds the trust in what you're trying to do, the trust in the ideas you're trying to participate in. And like I said, things don't change dramatically every single day. That's why it's so important to remember the higher time frame. That's why ICT has said multiple times that he spends more time on that higher time frame, monthly, weekly, daily charts than he does on the 1 minute and 5 minute, because that's where narrative resides. And you have to be able to trust that narrative, because if you're able to frame out a higher time frame bias and draw on liquidity, your lower time frame is going to make a whole lot more sense, and you'll allow for more patience and you'll trust it. But if you just focus on the lower time frame and you don't have any understanding of what I've just basically broke down here, that's why you get whipsawed constantly and you feel like you can't get in line with bias, because you're trying to change bias way too much, or overall narrative or you're disregarding the monthly, weekly chart. And you think that because the daily or the lower time frames are faster, there's more opportunity, when that's just not the case. Big money doesn't trade on the 1 minute. Big money positions and attacks pools of liquidity on that monthly, weekly, daily chart. And on the way to those draws on liquidity, there's a process that takes place. There's levels of liquidity that have to be swept and, like traders that need to be unseated so they can position themselves and load up their entries. They don't take one big, fat, huge $1 million entry. They take like multiple entries at multiple different points of reference and liquidity to then ride the wave to that higher time frame draw on liquidity. Right? It's the mindset of smart money. Most people don't have any idea of how they operate. And ICT is, in the boring lessons, and a lot of those lessons that people don't like to listen to, people complain and all that other stuff, all those times when people complain are the exact times that these types of gems come into play and just get laid in our hands. And if you're not paying attention, okay, and you're looking for like order blocks or something, and you just disregard this type of topic, then you fail to get the understanding of how smart money operates, because that's your enemy. You're in war. Like, are you not going to pay attention to what your enemy does so you can capitalize, or are you just going to continue to get cannibalized because you want to listen to what you want to listen to, or you want to try to do what you want to do, right? Or paint this picture that you want to see, right? You have to understand the different intricacies and things that are important. And as a new trader, most people have no idea what's going on. And this isn't like a flashy, super overly exciting type of topic, right? But I mean, if you want to be able to be a good assassin, okay, you got to consider this perspective, and so you got to spend time understanding how smart money looks to operate, and then how you can capitalize on that as well. All right. So if you guys have any questions as we continue to press forward, definitely leave them in the comments, and I will address them as they come. So yeah, we're going to watch what happens here. We're hitting this wick midpoint. Okay, so we want to observe and see if that's going to have an impact or if we're going to just slide through. Again, we're pre-market. We're ahead of the open price at 6:30 or 9:30 Eastern. So again, we have to be very patient. We have made considerations in terms of what could potentially happen, which could be this, maybe the high of the week. There's SMT at the highs, right, from this high and this high. And the Dow is the weakest, obviously, of the three, right? It's dramatically reached down for a discount. And so we have the NASDAQ. Oh, wait, whoops. I'm on the micros. Okay, there we go. So yeah, the S&P and the NASDAQ seem like they're now looking to tip. Seems like they're working towards that. Like I said, the bonds and yields are pretty much making me feel like unless something changes, unless we get outside of this daily fair value gap and get above it, and if it looks like it's going to start attacking this high, because the S&T failed, I'm of the opinion that we're likely to continue going lower. And then this is obviously looking like it wants to go higher. And if you look at this is a consolidation. Okay. And then if we go maybe to the four hour, I could show a little better. So we got consolidation, first stage accumulation, second stage accumulation. Could be a smart money reversal in here to then potentially reach up and attack the high as a market maker buy model for the yields. Okay, so we want to observe and see what occurs, whether this is going to respect this range here. Because if it is going to respect this range and this is a market maker buy model, part of a more advanced validation principle using market maker buy and sell model frameworks is if this accumulation on the left side of the curve is respected and we don't get below this low and it just hits it and shows respect, maybe leaves this as a breakaway gap, that's even more deeper confirmation that we can end up trusting this bias, aside from the 3 PDA rule that we've discussed in the last video, and everything else in terms of intermarket relationships. So just some food for thought. Right. And if this was to break, obviously these equal lows look kind of tasty. Okay. But again, that's a contingency plan. I'm assuming that because what we see here, it seems like this was the low of the week. And again, validation is 3 PD arrays. In this case, it'd be an order block here with these down candles. We have 2 fair value gaps, or you can just say 1 because it is just 1 fair value gap also. But then if we break down below the swing low and this inversion fair value gap, that's already 4 PD arrays below price. And then take into consideration what I said about this as a possible accumulation, and then this will be a first stage distribution. Price comes up into this candle here, could be a second stage distribution. And if that is the case, this will be a quick sudden move up here above these highs, maybe filling in the rest of the fair value gap. Of course, that's like a little further in the future of what I would like to potentially see. We got to take price with what it gives us in the moment, but that's something that I can visually see possibly occurring if we do show respect to this. I mean, this is an order block here too, right? So if you go up to the higher time frame, maybe the daily, or maybe even weekly or 2-day or whatever, where you can end up visually seeing this as an order block because these are consecutive down candles. So these are an order block. It's in some time frame above this 8 hour. So if it uses that also and respects that, and again leaves part of this open and shows respect, then I can again see us potentially painting this narrative that we've just discussed. And mind you, if that takes place, imagine how many days that bias would be valid for? Just imagine. That could be like another week straight. And if everything looks like it plays out and respects these levels, but price retraces, a lot of people would be like, oh, I'm probably wrong. Well, you need to relax. Pick a side, trust that side, and remember, when price is bullish, it's going to retrace. So just because it retraces after price was running higher, that doesn't mean the higher time frame narrative has been disrespected. What you can consider is if it's bullish like this, maybe today or tomorrow or whatever day after a run like this can present a retracement to possibly get into this fair value gap. Is that a tradable scenario for you to paint a picture on? Absolutely. Mind you, that's in the context of this larger potential framework. All right? I hope that makes sense, right? Because that's just another one of those tips that helps you not have to only have the one bias and only trade in that direction. You can, if that makes you more comfortable, that's fine. But if you want, you want to open up a door to even more opportunity as price is printing, so you can have a little bit more understanding as well as a little more opportunities, then you got to consider that as well. Because going off this high to retrace into this fair value gap to continue to go higher, that's a counter trend idea. The retracement to do that could use this fair value gap as the rejection point to push price lower into that, which is a tradable idea, like I said, plus buy side's been taken, right? And then once price gets down into here, knowing the higher time frame bias, you won't hold the trade too long, because a higher time frame is, in my opinion, looking like it wants to go higher. But again, that doesn't mean that it's gonna. It doesn't mean it's just gonna run and not come back. And if you want to be able to participate and have more opportunities, doesn't mean overtrade, right? But if you want to have more context when you're able to also formulate a higher time frame narrative, that's one way you can do it. Like if there's a premium array that we hit in a bullish market, well, that can be where you can time a possible counter trend retracement to then get us down to a level like this fair value gap. Remember, price is only going to do one of three things. It's going to attack some form of highs or lows, create rebalance or retrade to a fair value gap or another PD array. In this case, there's a fair value gap right here. Or it's going to consolidate. In this case, we've already taken out buy side. So now, for price to want to continue going higher, it's not unlikely that price would come down to here to then go higher. Because that would be price coming down to an inefficiency to then seek a high again. Or price, if you want to look at it this way, price comes down into an internal range liquidity area, which is like a fair value gap, to then seek external range liquidity, which in this case would be a high that's created. We go from internal to external when we're doing this type of like trending environment, right? So yeah, and if price goes from stops and then runs through to stops, that's a beautiful indication that we're likely to not continue going in this upper range direction, right? So it goes inefficiency to stops, inefficiency to stops, right? Or internal to external, right? Or it'll go from stops above the highs to more stops. And then that basically would not allow price to continue. I hope that made sense. We can get into a deeper discussion about that type of viewpoint on market structure and changes in the state of delivery and all that type of stuff. But yeah, we can get into that a little later before I start going off all about that. It's one of my favorite topics. But yeah, so with all that being said, right, I want to see potentially price seeking this low, possibly breaking through this midpoint of this order block. So, like I said, with all that being said, let's start breaking down lower time frame ideas. So it looks like prices retraced. Why is it keep going to the micros? All right, so I mean, looking at things from this perspective, you can see an obvious liquidity pool here with the potential bearishness in mind, with all the things we painted. It looks like this is a pretty logical, easy bread and butter type of view to attack. Price basically dropped lower, retrace back. If you take all these down candles here, we can actually see that that is from this high to that low. That's a breaker. Okay, this is the DXY. Remember, we're trying to see reasons for price to want to go higher here, and then lower on the DXY, or on the indices. It looks like these are consecutive up candles. That's probably an order block. But aside from that, you can see this big down candle. Stop. This is what I mean also by stops to stops. Stops taken, right? Aggressively. Okay. Stops to stops. So price has not continued to go higher. Now, if it went from stops like this to inefficiency and then continued to go higher, you can see how that, you can see how price continues to move higher. But when you see price go from stops, breaks all the way down to more stops, right? Generally that creates a breaker also, like we see here. Generally when a breaker forms at a particular level, in this case there's highs and a SMT at the highs, while DXY looks like it may want to go higher, then price ends up turning around and reversing, right? So again, looking at price from this perspective, we can see the previous week's low here. These are relative equal lows. What's below that? Sell stops are below that. Anyone that was winning in this big run, they've been stopped out here. Anyone still holding on to for dear life, they're holding on here. So prices, look from what I see here, looks like it's quickly wanting to run down there, right? So again, this just furthers my convictions that we're going to see price seek lower prices, and then we'd like to obviously see this down candle not be respected, because technically this could be a breaker here. But there's a lot of things lining up with this most likely not being respected, so we're going to just keep tabs on that and see what happens, right? Again, we're before the open. I don't like to trade before the open. It's part of my rules. I'm not sure if you have that perspective. You don't have to do everything that I do, obviously, but it has served me very well, and a lot of my students very well, to be patient and wait for the actual open, because you have to consider when you're trading before the 6:30 open or the 9:30 Eastern time for the New York session open, you're trading before the manipulation. So a lot of times trading before that will get you caught up in the manipulation, right? Like, have you ever been in a trade, entered it before the actual open price for the New York session, and you thought it was bullish, but price tanks aggressively and then goes higher after the open just to stop you out and go in your direction? Well, that's why, because you're trading before the manipulation. It's just one of those things that it's very, very nice to be aware of, because it's the battlefield we're playing in. We have to understand where the roadblocks are, where the traps are at, and that's one of those traps. Most of my losses in the last 4 years came from that type of scenario, from trading before the open. And then, of course, the bias is correct, and that obviously pisses everybody off. Clearly, it's one of the most frustrating things about being a trader. But how do you mitigate that? By just waiting, letting the manipulation play out, realizing that you don't need to worry about missing a move, or you don't have to tell yourself, if you saw one move perform, you don't have to tell yourself you missed the move and now you're never going to find a move, because that automatically removes your ability to think logically and actually see the other opportunities that provide themselves to you, which things happen all the time. all the time. For example, let's say that this was after 6:30, right? Price ran up. Say you missed this breaker that we pointed out earlier. Well, if you freaked out, you obviously wouldn't have been able to do anything because your mindset's now screwed because you're telling yourself all this negative crap. Well, if you didn't tell yourself a bunch of negative crap and you paid attention and stayed focused, seeing that this delivered like that, maybe that helps you trust that price is going to go lower now. Well, what's this? Low, high, lower low. Consecutive down candles here, right? Outline that. That's a breaker. There's an entry. Not saying that's something I would enter, but it's just an example, right? This type of stuff happens all the time on the lower time frame when price delivers, right? But you have to be paying attention and not beating yourself up and thinking that that one move was the only move that's offered throughout the whole day, because first of all, it's not true, and second of all, there's much more opportunities than you can even imagine. But you can't just lock yourself out of being able to see that stuff because you didn't get what you wanted right away. Another one of those big lessons to learn in psychological management. Yeah, so price obviously has taken off. Again, I don't care at all because there's going to be more moves, and it's just building conviction with our bias right now. The price is looking like it wants to be bearish, and looks like DXY may want to continue to be bullish. So when the 6:30 open comes, I would definitely like to see something like this occur. Like say we were just ahead of 6:30 open, and it opens, right? We have a fair value gap here, right? We have a swing high here. So what's above there? The stops. So if we could see something like this occur, price aggressively retrace. We also have an order block here. Actually, this is a breaker, to be honest. Low, high, taking highs, lower low. So this down candle, we don't want to see this down candle broke to the upside. We want to see this order block respected. But it's permissible for price to drop lower, rally up, sweep out the stops here. That's a run on stops. And then potentially set up something like this that you can end up entering to then possibly target this. This is, remember, the monthly order block. Right? We can see how this order block here is being respected. We can see this order block here is being respected. This is actually a propulsion block because there's an order block within an order block. All right? So we don't want to see the midpoint of this close below now. We want to see that hold preferably. It's part of the propulsion block rules. I don't trade off of those. I don't see that and enter. I have the things that I like to enter on, but that doesn't defeat the fact that actually being able to visually see like most of the PD arrays, that doesn't defeat the fact that that's important. Because it's like I said, this is war. Are you going to be prepared, or are you going to get victimized by the people that are more prepared and more disciplined? And people that have been doing this longer. Gotta prepare yourself as much as you can. But yeah, so we can start looking around even further. So let's observe these highs here. This may be interesting. These highs here. Okay, so there's no SMT there. What this does look like to me, this looks like a mitigation block. Whoa, okay, so we have SMT here. We have high here, and these highs are higher highs. Oh, I did label the SMT there. So yeah, that ended up sending price lower. And then again, this looks like it's a mitigation block as well. So it's just another layer of potential resistance that we can observe. And not something that we don't want to see price get above. And then again, we have this here. It's fair value gap. All right. We also have this fair value gap down there as well. And again, right, if we observe all this stuff, we can also see how this fair value gap was basically targeted. There's definitely liquidity down below there. But this one here looks kind of juicy. Hasn't been fulfilled. If we do end up tanking, I mean, that's a pretty decent idea. I mean, getting from here to this monthly order block, which is what this yellow, or this that's what this pink line is. It's a monthly order block. So if price wants to reach down into that, that can act as a draw on liquidity, right? Again, remember how I talked about this as a possible breaker? We want to see no respect to that. Because if that does occur and it just slides on through, that's further confirmation that we're going to see this continue aggressively and definitely come down and reach into this. All right. We've painted the picture of bullish DXY, bearish indices, and went through like a whole process from intermarket relationships, basically fundamental analysis using the interest rate markets, you know, painting a picture as far as why this should occur, what would invalidate this, what we should see, and if we're incorrect, what we could see also, right? But we're also, like I said, favoring one side, right? We're favoring this one side within that higher time frame, higher time frame potential idea, right? This is still bullish, but right now it's obviously looking to seek sell side liquidity. Until this fair value gap is broken, I don't change my bullish bias. But for now, we are going to reach for a counter trend idea. Okay? Because why would that be significant? Why would that be useful? Well, smart money doesn't just run in one direction. They have to go and position themselves at different levels. They can't put $1 million on one trade on the 5-minute chart. They have to layer things in, like layer it in here, layer it in here, layer it in here, and then potentially like blow up and go higher. Or the opposite could be true. They could drop lower, then they retrace into an order block, they're positioning there. Drop down, position at a fair value gap, they're positioning there. Dropped it, like, you see what I mean? Like they're layering their entries. And PD arrays, from what I've learned from ICT, are pretty much where they like to layer out their entries, which is why they're important. They're basically fair value points, right? So I hope that makes sense. Oh shit, whoops. All right, so we also have these consecutive up candles. Let's see, is that an order block? Yeah, we got a beautiful order block there. Yeah, that's a beautiful order block. If at 6:30 we can see price return back into this area, I think I like this, what this order block looks like here. If we can see price run up into that level and like maybe take stops on 5-minute or 1-minute chart, and then see DXY continue to do what it's doing, obviously, maybe seek this or this high, like I pointed out, that would be good for us to try to position and then target the previous week's low. So again, I talked about how intramarket relationships are important to assist us in bias. Well, all these things that we've discovered so far has painted a picture of bullish DXY, bearish indices. I also mentioned that currencies can be used, like the ones that are opposed to the DXY can also be used when we are doing intermarket relationships. So we have this low here. So I made a higher low. So let's go observe what the GBP did. Right? So we have a higher low, higher high. So the euro should have another higher high. It did not. It had a lower high. So there's confirmation, further more deep confirmation and reasons to trust the indices are going to fall and attack these lows. Man, oh man, I hope you guys have been paying attention to this, because this is the whole process. Like just this process we've been through, and some of the validation, invalidation I amplified, that is so like ridiculously powerful. I assumed that this was going to be a lower high, and it was. We already painted before we got to the DXY assumption that it was going to possibly be bullish, and the indices were being assumed to be bearish. Before we even did that, just to add a layer on top of it, we just did this, and look at what we just saw. How it all lines up. I didn't even have to look. I just knew one of them were going to be a crack in correlation. That's experience. That's where you're looking to get to. Okay? In terms of trying to figure out bias and all these things. Right? And there's a lot of power in a lot of these things that are shared. Not only here, but in my private community. And, just everything that's even on my YouTube channel is, it's straight to the point. So all you guys that hop on these lives, definitely continue, because we do this on a regular basis. Right? And you will catch on. The more close you are to people that know what the hell they're doing, the more it'll rub off onto you, and it'll start to make sense. And it's not rocket science. I'm not a rocket scientist, okay? I like things very simple, very systematic, and repeatable, because I do this full time. I can't have sporadic nonsense, or I'm not going to pay my bills. like, hello? Like, it has to be somewhat easy to understand and systematic. Otherwise, it wouldn't even be worth trading full time, because you'd have a fucking horrible experience, up and down constantly, and not predictable. But what we do is very predictable. So, but yeah. So since we have a pretty solidified idea of what we want to see price do, multiple confirmations in terms of price wanting to seek lower prices, we are going to stick to now the lower time frames, flipping back and forth, of course, to what the higher time frame is doing as we approach the open. Because again, if the higher time frame is going to make a move, it's most likely going to make that move when either a news event comes or when the open price comes. If y'all got any questions, let me know in the comments. I'd be happy to answer any questions. I appreciate y'all hopping on, by the way. You could be doing anything else, but you're over here listening to me talk. So I appreciate y'all. So we do have like a little bit left in this fair value gap here. I do like NASDAQ. I'm like interested in NASDAQ. I mean, the S&P may be good too, but it seems like the NASDAQ hasn't moved as much yet. So there's like a little bit more juice in the tank. And I like this draw on liquidity that we've painted out. I like that deep fair value gap. I mean, we even see that there's a little bit left here as well. We do have this delivery on the buy side here, which then delivered sell side, which when it came off the low. So that may not be as powerful as we'd like it to be for a draw on liquidity, because it did offer on this side, it offered buy side, sell side, and then offered buy side. That's why price came down and hit the high here and didn't have to fill in the rest of this. That's why this was left as a breakaway gap, because it already delivered buy side and sell side in this wick. So when price came down here to fill in this fair value gap, a piece of it was left open that was already delivered. That's algorithmic. You could visually see that. fascinating stuff. All right, so So yeah, we're just waiting for the open to come out. Yeah, if y'all got any topics you'd like me to cover, or if you're struggling with anything, definitely let me know in the comments. So yeah, let's see what's gonna happen here. So yeah, again, this is an order block here. It's like a 4-hour, 8-hour order block. So yeah, one thing I want to mention too is obviously Power 3. Sometimes I forget to mention it because it's just like, just part of what I do. Like it's a never-ending thing. It's constantly referenced because that's just how the market works, right? Using Power 3. But we could see that this was the open price. Price attempted to get above it but couldn't. Same thing with the Dow. Same thing with the S&P. So that's a bearish signature. Price couldn't even get above that. So it's that weak, right? So just another justification for us to possibly see price continue to want to seek lower prices. And now look at DXY. So yeah, again, we want to see we want to see if price is going to want to seek this potential draw on liquidity. Previous week's high. So yeah, it doesn't seem unreasonable that it will want to come up and reach up into that. Of course, we'll see. That's what I'm favoring. I'm favoring sell side. Let's look at these highs here. Let's observe and see in that fair value gap. It was SMT in that fair value gap. So yeah, I want to see the open come out. It looks like we're extremely weak. So unfortunately, we may not get something to push us up into this buy side liquidity to then give us that hard reaction to be able to enter on. If you're specifically looking for the YouTube model, that's something you have to wait for price to run up, target buy side where stops will be at, then create a swing low, obviously, and then continue. That's what we want to see, right? That's what we're going to try to watch for. And where's our buy side liquidity that could be taken to present us with that opportunity? It's right here, right? We also have London's high, right, which is this little blue box. London's high is up here. All right, that's really close to the open price. I wouldn't want to see it come all the way back there. I don't know, I wouldn't want to see that. I like this 4-hour order, or this 8-hour order block. Price can return back into that, maybe fill in the rest of this fair value gap. That's ideally what I'd like to see. We do have these order blocks here. See, is there one? I mean, this is a really small order block, but I mean, you can consider it. But again, I'd like to see us run up into there. There's an SMT at these highs, so it may not. It may even use this as a potential area to continue to press price lower. It may not be able to break through this fair value gap. Oh wait, what the hell is that? Okay, it's a 2 hour fair value gap. Let's see, actually let's just paint it here in the 4 hour. Oh, another thing, see this large wick? Another PD array that's in this area for validation and validation would be the midpoint of this wick here. Because remember how I just said that when price came down, remember how I said when price came down, where was it? Where was it? Right here? I believe it was right there. Where did it go? Freaking lost it. But yeah, just remember when I talked about how when the wick delivered to the upside and then it left the opening, right? It didn't have to go deliver the whole fair value gap. Well, that's similar to what could potentially happen here with this large wick here, right? It's similar to what could happen with this wick, right? It may just again come back into the order block on the 8 hour and not have to deliver through the midpoint. That's just institutional order flow, right? We're reading institutional order flow. Another thing that I've mentioned many times is the wicks. Also, as price is printing, watch the midpoint of the wicks. See how it respected the midpoint? So let's see if it respects this midpoint too, right? You notice how you go from this high of the wick to the low of the wick. Notice how the midpoint is being significant, wick through it, but then also hit the midpoint of that wick and continued. It's also an order block. You just see the reaction, how price is showing us what it's gonna end up doing, or what what it looks like it wants to do. So yeah, definitely watch this. Watch this area here. Remember, our target is potentially the previous week's high here. And then, of course, we got the previous week's low. This is the previous week's low here. So if DXY attacks previous week's high, we are going to look for the NASDAQ to attack its previous week's low. It's only right. So how would we get down there? Right, how would we look to possibly get down there? What are targets we can use? We got fair value gap here. We have these lows here. Right, there's our equal lows here too, which makes me feel like this fair value gap could be pretty significant. All of that is on the way to the higher time frame narrative, which is potentially the previous week's low. So I want to see again when we move into 630, which we are, coming up on. Let's see what happens. Let's see what happens if when price retraces back into one of these areas here. Either this fair value gap and this order block combo, it's either going to respect that, or it's going to maybe push higher to maybe come and fill in the rest of this. But again, it may not, because remember that big large wick? That's why this didn't have a huge retracement. It didn't have to. It came into this order block, and it clearly has respected that. Damn right, Nico. Freaking equal lows. You know the vibes. Nico, you definitely know the vibes. So yeah, we're watching this fair value gap here. Keeping in mind this fair value gap here could be used as an inversion. think it was like I think that was an 8-hour fair value gap. Let me double check. Yep. Oops. Let's see what happens. So you want to be pretty cautious as well. It is the end of the month. So it can either give us a retracement, like we're, kind of trying to see and what we've been talking about this entire morning, or it could just do nothing and wait. Right? So that's why, again, there was no news. Oh shit, whoops. So there was no news up until, or there is no news up until 7 o'clock. So with that being the case, we have to wait. We don't trade at 5:30. We wait and observe 6:30 unless something presents itself with our model. But we don't force anything. We don't think we missed a move because it's already delivered. We don't do none of that nonsense. All right, let's see. 6:30 is incoming. Again, we've shown very, very heavy bearishness. Things have looked like they are just sliding off. There's been SMT as well at the highs. For me to want to get in, I don't just chase price. I want to see us run up so we can unseat somebody and position ourselves. I mean, that may even come up into, this high, bounce up above this high, hit that, but we'd still have to see our model. This is a potential breaker here. Ran out below the low, ran out above the high. So yeah, price could return up into there. That's a consideration too, right? These consecutive down candles, this little zone right below this 8-hour order block. So we'd have to see what occurs there, see the behavior that responds from that level. So because there's news at 7, that may be tasty for our silver bullet. For those of you just hopping on, appreciate y'all hopping on. Our bias is bullish DXY, bearish indices. If you want to know why deeply, you gotta hit the rewind and watch this whole video, because it's a banger, I'll tell you that. Like most of them are. If you pay attention. If you pay attention. All right, let's see. So we also want to keep in mind our regular trading hours gap. So regular trading hours gap is going to be massive to the downside. Looks like it's going to open at a heavy discount. So that could very much be a reason for price to want to come higher. Give us a little retracement higher, which is what we want to see. We want to see price run up a little bit. Let's see. Let's see. Okay, yields look like they're still pushing higher aggressively. Remember, all the things that I talked about with this could be a market maker buy model for the yields. This could be a market maker sell model for the bonds. Then that could lead us to obviously bullish DXY, as we've talked about, and possible bearish indices, which is what we're basically looking at. Now, price is doing what I said it would likely happen, which is retrace into some form of a premium. This is what we want to see if it's going to be bearish, because now it's retracing. We also have another reason for it to retrace like this, which is the regular trading hours gap. So let's see, because look, they're positioning. If it does end up going lower, like we've been talking about, this whole psychological attack is to send price higher, unseat or reposition smart money with willing buyers to position themselves, position their shorts with. So we'll see if, again, if that's the case. We are in no rush. We gotta wait and see things fall into place. It wouldn't be surprising again if price wants to run all the way up into this 8-hour order block. These are also relative equal highs. Although there is an S&T there, it still is a possibility for price to want to run up there and stop them out. Still a possibility. Hope y'all enjoyed the stream so far. Again, I appreciate y'all hopping on. Yeah, let's see what's going to take place. Bonds are still falling, yields are still rising. So one thing to pay attention to here, again, we have that regular trading hours gap, which is instigating this retracement. We want to see a run on stops, we want to see a swing low form, and then we want to see a shift in market structure if we're trading the YouTube model. Again, you want to consider what I said, how this is potentially also a breaker. So it wouldn't be surprising if they just use that and price sends itself lower. So just think about the stuff that we've discussed here. If you are new, you need to really think about the process, the observations that I've pointed you to, because this isn't, you should never have the opinion like, let me watch someone so I can only take their trades, because that means you won't be able to make this a career if that's the case. You know, you want to make sure that you're able to observe the process so you can implement the process and then eventually be independent. And, you know, maybe watch things like this for, just to hang out and continue to iron sharpens iron. So if you watch someone that knows what the hell's going on, and you're continuously working towards knowing what the hell's going on, then eventually you'll know what the hell's going on. Right? So yeah. So price is now pushing up through this possible breaker. I think we looked at it on the 1 hour and saw that it is a small order block. So that I don't like order blocks that have massive down wicks, although they can still obviously play out. I just prefer them not to look that way. We do see DXY rallying. We do see the yields continuing to rise. We see the bonds falling. I hope that the whole bias is clicking and making sense. Like, oh snap, all this shit is falling into place and doing exactly what he's saying it's going to do. Minute by minute, right? Because it's fascinating stuff. And it's not, I hope it hasn't seemed like rocket science. I'm a very simple person. So if you can attach yourself to how I'm sharing this stuff, like 170 plus students have, you're going to see growth, even just from the YouTube channel and these live calls. Because this is something that my private community gets every day, even on weekends, unless something, is happening in my life. Right? But so prices return to that order block. Now let's go drop down to the lower time frames and see, do we have a swing low? Have we taken out buy side liquidity? Is everything still in alignment and confirming our potential lower prices in the indices and higher prices in the DXY? I would say absolutely. Here's your swing low. Here's your run on stops. We're at a breaker. If we break through that and create a fair value gap, it could hypothetically be a possible opportunity to attack some shorts. This is not financial advice. I am not a financial advisor, and anything you do, win or loss, is your responsibility. It's not mine. All the gains you make, any losses you take, it's all solely in your hands. Just to make sure everyone's aware of that. Yeah, let's see. There's no opportunity unless, at least for shorts, there's no opportunity unless it was to switch down below this low. All right, so again, we got to wait. Right? If you had the perspective of possibly seeking price to come up above here, right, to take this out and go off the idea that, maybe you want to see price get up into this 8-hour order block we pointed out, right? Don't let me change your mind, right? I have what I'm looking for specifically inside of a narrative that we've painted. That doesn't mean that, other opportunities with different schools of thought within that same narrative are invalid, right? I personally just have all these different things going for one particular idea, one narrative. So that's what I'm choosing to stick to because I'm an independent thinker, right? And so I'd like for you guys to also be independent thinkers as well. My boy Nico, Indica 1997 down there, is a beautiful representation of that because, sometimes I sell and he buys and we both win in the private community. And it's a beautiful thing to see. Right, so, all right, let's see what happens here with the DXY. Again, we do still see the bonds and the yields still confirming, higher DXY. So we want to observe and see how this is going to either respect or slide through the midpoint of this as we approach the silver bullet. Because news is coming out at 7, right, during the silver bullet time, that's what we're pretty much waiting for because there hasn't been any news. There hasn't been anything. We're not sitting here worried because it ran up and, oh my God, I'm missing a move. No, we have things we're looking for. Look, if you wanted to take the idea of potentially seeing price get up into here and then maybe look at this as a shift in market structure and you entered here, right? That is a, small move. You got to be very nimble because what we've discussed all day, how it, wouldn't have been ideal. That's why I didn't take this, right? But that's still 30 freaking points. Would you have been incorrect if you got in here seeing the possible YouTube model to get us up a little bit high, right? Maybe above this or to this 8-hour order block, which we pointed out, and obviously it looks like it's going to respect that. Is that a problem for you to have taken a buy to get up there? No. If you would have understood the narrative, if you understand that you need to be cautious and take what you can get, in this case, and not always need a home run, then you would have been able to be profitable. And then, just like I said, some people may have taken this buy, but I'm waiting for the sell. If this person that took the buy here made money there, and then eventually if it sells and then I take an entry and then I'm able to win, who was right and who was wrong? If we both made money, we're both right. So it's not about being right. It's about, can you get in the market, take an entry that you trust, that has logic behind it, like we've painted today, like I just discussed with this, and can you make the money? And can you keep the money? Doesn't matter how much you make. It matters what you keep from what you do make. Because anybody can get up in the market and trade and make a bunch of money by luck, but not many people can get in the market, make money, and actually preserve that capital. Most don't. 90+%, maybe even more, fail to realize that that is the goal. You're managing risk, okay, managing yourself, and trying to preserve capital. Number one priority is to preserve capital and make sure you keep the money that you make. Like a good tip that one of my other mentors before I came to ICT told me was, when you make, say you make 10% or 5%. Well, if you made that profit, you now need to cut that in half and put away half of that profit and look at it as you only have a small percentage of what you just made to risk on your next trade. I mean, that's more of an advanced way to view risk management, obviously. But even then, it's still not overly complicated. When you make, let's just keep it simple and say you made 100%. Well, okay, if you made 100%, you need to take away 50% and stash that away and not use that. So you lock in that 50% that you made, but you only now can risk the other 50% if you do want to take another trade, which I don't think should happen. You should just make the money and sideline for the next day. This right here is a breaker, by the way. Also, potentially a YouTube model. So yeah, let's watch and see what that's going to do. If the XY continues, we should see this potentially drop. We're approaching the 650 macro. I would like to see the 650 macro deliver. We have an order block here too, these consecutive up candles. It's kind of ugly, huh? There we go. Got this order block there. So yeah, we got to observe and see what's going to happen with the DXY. DXY is still rallying. So everything is still confirming what we're talking about in terms of lower prices. So this is another potential idea with what we've been looking for. DXY is still rallying. Multiple confirmations for price to want to go lower in the indices. And we've been patient. Right? We pointed out the possible scenario for someone to have caught this. But now look, these people are trapped. They're trapped in the buys right now thinking it's going to go higher. We've painted a picture for price to go lower. So let's see how that transpires. We have SMT at the highs here. This created a higher high. S&P and this, the Dow made a lower high. See? It's a more possible justification. This is signaling that the NASDAQ is one of the stronger out of the three. So we got to see further evidence. Again, this is a possible entry, right? Not financial advice, but it is a possibility. Got to keep in mind too, we do have a news event coming at 7 o'clock. So that could make things a little shaky. So I'm personally waiting. So now this is that candle here as a possible breaker. So let's see, are we going to stay inside that? Remember, if we say we hypothetically did take this entry, what are our invalidation points? Well, we have this as an order block. We have the midpoint of that range. We have this breaker candle. It's very well delivered in here. There's not any fair value gaps. So the YouTube model is not present at all. The YouTube model here, though, for this original buy was there. But look, they would have got stopped out. Again, there's a news event coming. You don't want to disregard that. We have this as a possible breaker here too. Okay, and then we have this high. So if price was to smash through all that, obviously you're incorrect and you'd sideline. You'd wait. Because we also, again, have a news event. We're also ahead of the macro. Let's see if the macro gives us a more smooth experience. Right, we kind of failed to get up to that 8-hour order block. That's what this is. We have now reached into this order block too. So let's see what the delivery would be. So if you did take an entry there, again, your validation point, you would have probably entered somewhere in here, right? When you take an entry on NASDAQ, you have to really consider the stop size, because this, I mean, some people won't be able to take a 23, 24, 25, or 30 point stop. I know I don't like taking that, right? But maybe someone, is okay with that, right? I wouldn't want to do that. With what we see right here, I would now be uncomfortable. I'd be like, probably save the stop. And then we would wait. If you take a loss, you wait, especially when there's a news event or for ahead of a macro. I don't like taking entries again, right? One of my rules, I don't like taking any entries or pressing things before the 6:30, knowing that there's news coming after, or outside of a macro, because macros are used to basically push price. There are times when price is going to actually deliver towards a particular liquidity pool, right? Or sometimes they're used to set things up and hit a run on stops to then present the opportunity within that macro. If you want to avoid consolidation and getting stuck in choppy nonsense like you see here, then you're going to want to enter towards more of a macro time window versus just random entries. Just because a model shows doesn't mean it's high probability. How do you increase the chances of it being high probability when your model shows? You enter them in a macro, because the macros are engineered to literally push price in a particular direction. Let's get a view of all three indices. I forgot to pull that up. So I'm still not convinced that we're not going to go lower. I'm still wanting to see evidence. We do have equal highs here, so that could be an issue. We do have equal highs up here. It could be an issue, right? See how we still got the bonds dropping. We still got the yields rallying. We'll see. Are we going to give us, is it going to give us a fast sudden move and leave this open? Or is it going to retrace or try to retrace into this fair value gap before it wants to continue going higher? That retracement there would lead to DXY, potentially also retracing a little bit or pausing for a minute. And then that would also send the indices into a deeper buy-side retracement. Right, so we could see we're inside the previous week's range, so it's not unreasonable for price to be held. It's the end of the month, right? So like I said earlier, you still got to consider the conditions. If things don't line up or continue to be a little more difficult in terms of what you're looking for, in this case I was looking for this to hold. That didn't happen. Obviously this now looks like it wants to attack the highs we said could be a possibility. We're inside the macro now, so now we're taking out buy side liquidity. So let's observe what the reaction was here. Now again, would this have been an incorrect move? No. We painted a picture as far as why this could have been the case. Me personally, I was not looking to enter in something like this. I wanted to see us justify a reason to fall in line with what the bonds and the yields were showing, which was bullish DXY and bearish indices. I'm still of that opinion, but again, this is discipline. Not engaging, having conviction towards your idea, what you're looking for, and being okay with not engaging if it doesn't show up. It's a very important thing. Yeah, this move could technically be, oh, I missed the move, right? But does that matter? In my opinion, no. At the end of the day, your rules are going to save you and keep you honest and consistent. If you try to break your rules because you're chasing the bag, you're going to break your rules, and you may win sometimes. But again, remember what I said earlier. It's not about how much you can make, it's how much you can keep. And in order to keep profits, you need to ensure you're able to be disciplined and follow your rules and not chase, price and get swayed all over the place. It's a lot less stressful to commit to one side, and if it doesn't show up, you're patiently waiting for, something that makes sense, or you're patiently waiting for a reason to make the adjustment logically to then get in line with maybe a different opinion. But you don't quickly change things like over and over and over and over again. Because again, like I said, it's stressful as shit. It's unnecessary. Okay? And you're gonna miss moves. You're gonna get it wrong. And you just have to accept that and know your rules, know your model, and only execute with that. Especially when you're trying to backtest. Because if you try to backtest and you're doing 1,000 things at once, and you win a trade in backtesting, and you pump yourself up for that, but you broke your rules, you're gonna literally participate that same way when you're live, when you're trading live, and that's a recipe for freaking disaster. Okay. So yeah, let's see. So it looks like we're coming off of this high a little bit here. It's kind of slowed the pace for the run higher, for the yields, and that's in turn translating to DXY having a hard time continuing to run the way we wanted to see it run. Again, we're inside the macro. To trust the fact that this was going to drop low, remember what I said, we wanted to see this not hold any support at all. So we got to continue to observe this. Now we wait. I'm not interested in taking sells right now because of what we're seeing in price. We didn't take a loss because we're being patient. We're not freaking out because we know more things will come into play. They just have to align with what we're looking for. And again, just because I'm looking for a particular direction, a particular setup, doesn't mean you disregard the opportunity you had if you were thinking buys. You don't disregard that just because you're watching someone say something that has proven that they know what's going on for the most part. Right? You still need to be independent thinking. I know I did that a lot when I was first starting with ICT. He'll call something, it won't go because he's not perfect. He makes mistakes and gets it wrong too, especially in his mentorship. He got a lot of things wrong as well. Most of the time he got it right. But if you only go off of what someone else is saying just to enter, then, you're going to miss setups and you're going to miss the opportunity to cultivate your independent thinking. So yeah, in terms of what would kick me back into trusting sells again, we'd have to start seeing things crash lower. Shifting market structure here, breaking through this fair value gap, and then the model I'm looking for would have to show up, either a breaker or the YouTube model to the downside. So this is order block here too. So again, what are we looking like on the lower time frames here in conjunction with what we see on this higher time frame? So remember, we didn't want to see price get too deep into this area. We wanted to see possible rejections from these areas, possibly, run up into this area, but then we wanted to see rejection. If that doesn't take place, then obviously we don't hold too tightly to the assumption that price is going to go lower, right? Again, from the higher time frame perspective, we had specific things for us to justify us getting down into these deeper sell side liquidity targets. And if those things don't fall in line, again, we're still in a bullish market. Nothing has changed technically, showing that price is now going to just fall off the face of the earth. This is a counter trend idea in general for the time being, like I said at the very beginning, right? So everything that I've said, all the things that I do say, they have importance all throughout the session. There's a lot of things to keep in mind. I wish I could say that it wasn't like there wasn't multiple things to pay attention to, but there are multiple things. That's what makes trading a little difficult. But have your convictions, have your model, understand what you're looking for, be patient, don't freak out, and you'll be all right. So we see this order block here, right? Price could come down into that. If things start to show, like if this retraces here wanting to seek this, then that could pretty much put us in position to maybe capitalize on price continuing to go higher if price drops down into this order block. All right, but again, since what I was looking for hasn't came into play, I'm not here to force things. I'm not here to rush into a setup. It is what it is. So yeah, we see how price has basically filled in the rest of this fair value gap. We're now getting a push higher. So let's observe this wick here, the midpoint of this wick. So we see prices basically swept out this liquidity. Now prices basically swept this liquidity. We got news in 2 minutes. So let's see the impact that news has. Let's see if this was just retracing down to here. Let's see if the news will push us higher, because then that would possibly kick us in. If this doesn't break outside, if it doesn't close, the wicks do the damage. The bodies tell the story. All right. We're still also inside this 8-hour order block. So let's see if that's going to present us with our potential reason to look to fall in line with what we've been wanting to see based on what all these other assets have shown us in the deep intermarket relationship analysis we've done that basically showed us that we could potentially see bullish DXY, bearish indices. Something to note is these lows here. So if things start to fail and things get down into, down to here, they break through the midpoint of this, smash through, use this as resistance, then the contingency plan or adjustment draw on liquidity would eventually be possibly this sell side liquidity. Until that gets proven, I don't change what I'm looking at. But we do keep tabs on it. So yeah, this still looks like we could go higher. If we shift through this low, that changes the story. That disregards the possible previous week's highs are draw on liquidity, these equal highs. yeah, we see on the NASDAQ, come back over here, we see a possible shift in market structure here. But again, we have to see DXY get in alignment. So now we remove this. Actually, we just move this over into this fair value gap here. So something I want to point out here, this is a consolidation, right? If it is going to kick back into sells, this is a consolidation. First stage accumulation. Could be a second stage accumulation here. Maybe you get one more attempt higher. If not, we'll see original consolidation, first stage accumulation, smart money reversal at this buy side liquidity pool. And then once price got down into here, I'd be interested in probably taking an entry to then attack the lows, just so it confirms deeper and we give DXY time to present itself. Otherwise, if this continues and breaks this high, it may be trying to seek a little bit further buy side. I don't want to see that happen. I'm not going to justify that. There's not enough evidence for that just yet. And there's more evidence for us to favor sells, which again, we don't change our bias every 5 seconds. The bias overall has been bearish. This rally up could likely be manipulation, especially if DXY chooses to continue to run higher. But we have our contingency plans. We have our favored bias. There's no fair value gap in here, so for you to try to take the YouTube model, there's no entry offered yet. There has to be a fair value gap form. So, and it looks like, again, that regular trading hours gap was used as a magnetic pull to pull price up to a near-term premium. What near-term premium? The 8-hour order block inside the narrative of a potential continued bearish run. We've now swapped out liquidity here. So if smart money was to enter a sell, they've basically put themselves in position with engineered losers to the buy side, and then they'll offset positions likely below the lows or potentially down to here if everything falls in line like we've been assuming. And then you may be wondering, so when price continues to drop, if it breaks through this area, how are we going to be able to consider getting into an entry? Like, where would the entry possibly be? Well, if we can get like a retracement, those consecutive up candles could be an order block potentially. Or if price can set something like this a little bit lower down here, run that, and then present the YouTube model in the continuation variation, that's an option. If we break down below this, I mean, you could try to use a fair value gap of some kind that you see. We've already taken buy side, so you can be, you can rest assured that business has already been conducted to the buy side. So we shouldn't see price continue to run through that if we're going to trust this 8-hour order block. All right, so obviously, like we talked about, there's been buys that were having the ability to be profitable. But again, the whole moral of what we're discussing here in this call is trusting your bias, or trusting your analysis, and not being a freaking spaz and over trading and pushing like a madman, right? There has to be things that align. So again, if DXY does continue to do this, we see the contingency plan for buy side there. I'm not the possible draw if that contingency plan does take place and DXY chooses to seek the other side, we would the adjustment would be seeking these liquidity pools here. This is also a breaker here, or an order block, whichever one makes sense to you. We've hit that and it's rejected. So let's see if we can continue to respect that. See, so these candles, if it gives us this continued up move, respects this midpoint, and then DXY can gain some strength and stop doing what it's doing, then we would be able to trust these consecutive up candles as a possible bearish order block, and that would continue to show us that there's still trust in the bearishness. But again, if it just rallies above this, then the sells are not to be fully trusted. Yeah, let's see. Let's go on 2 minute. Do we got an order block? So that we didn't have enough to present us with an order block there. Because again, there's no fair value gap. So let me ask you this: did you miss a move? If it sells off, did you miss a move? If your model is the YouTube model, no, you didn't miss the move. Right? You didn't miss it. Well, let's continue to observe the delivery and price. I like how this wick respected, or the wick up respected the midpoint here. So that's giving me still signals that we can potentially trust this possibly setting up to go lower still. We still see now the bonds falling. The yields are still continuing to rally. So everything is still favoring the original idea of bullish DXY, bearish indices. So, okay, let's see what happens. Let's observe how this is going to respect this here. Let's see, did that present us with an order block? See, so we're kind of in between this 8-hour order block and these consecutive down candles, which is also an order block in itself on the 2-hour or on the 1 hour. So we're inside of that 8-hour order block as well as this 1 hour bullish order block. The 8-hour order block is obviously the higher time frame, so it may hold more significance over this 1 hour order block. And then you layer all the things we've discussed, you'll kind of see if this does deliver lower, seems like it's going to, it'll show you the significance between the parent time frames and the child time frames. Basically the upper range time frames versus the lower time frames, how the higher time frame levels hold precedence over the lower time frame levels and PD arrays. So yeah, let's see if we could break outside this fair value gap and turn it into an inversion. And then remember, this could be a market maker sell model. So once we get down into this level, it could very well be time for a quick sudden move down to the sell side. Again, is there any model here that you could have entered that you trust, that you practiced, that you always implement and can say it's repeatable? If the answer is no, for me it's no. But if the answer is no for you as well, did you miss a move? Is there anything to be upset about? Yeah, we're sitting at the chart. We want to make money. I get it. But it is what it is. This is trading right here. This is proper trading. Proper perspective and engagements. How you need to operate so you can separate yourself from the 90% of failures. Okay, we see a fair value gap in here. So it doesn't look like that wants to be respected. But we'll see. So something to consider too, if this breaks above this high, and DXY falls, could be reason for us to make adjustments and then seek the buy side contingency plan. And we can paint the picture for the Dow as well, as we pointed out earlier. But again, things have to fall in line. If DXY is rallying and the others and the indices are rallying, that's not high probability. It's just not. And then you add on the fact that it's the end of the week or end of the month. I mean, it's typical for things to be a little disjointed and give conflicting ideas. It's typical. And again, that's part of being a trader too, is understanding the environment, understanding the conditions, and what conditions make sense to you, and when things are a little off. So here's 2 minute. Let's look at the 3 minute. So again, we have this order block still, and we're inside this fair value gap. Let's study how that's going to react. Still got this 8-hour order block. So now we're coming off of this high of the fair value gap. I think it's a 10 minute. Wait. Okay, it's a little positioned a little off. There we go. Oh, it was for the 1 minute, huh? Okay. So here goes DXY. Let's look at the indices. Okay, so the Dow now has tanked. So again, notice how I haven't changed, and I've been waiting to change into the contingency plan. I've mentioned it, right? I've mentioned what needs to happen. We need to break above this high. We need to have these other things in alignment to fully adjust what we're trying to see, right? We don't just, oh my gosh, it seems like it's going to break through and change. No, it has to physically show you. And until the levels I've mentioned get disrespected, I don't change my objective. I don't consider changing my objective. Again, less stressful, more dependable, because again, that's just not how the market works. It doesn't, the higher time frame narrative doesn't just change every 5 seconds. There has to be multiple reasons why, not just a hunch that you feel, oh, maybe it's going to do this or do that. No, there's processes that you need to employ, and validation and invalidation principles you have to utilize. So yeah, let's see how it responds to this fair value gap that we've been using. DXY is just not being very helpful in terms of what it's trying to do. It's now kind of stuck. And then of course, like we just looked at, the Dow kind of tanked a little bit. All right, so okay, now NASDAQ is being a little more clear. S&P is looking a little bit like it's gaining some strength. But again, the bonds and the yields are still confirming our sell side delivery. So if we move up, continue to observe what price is presenting us with right now. Now, if price was to, where was it? Where did it go? All right, so if price was to now break down below this candle's low, that would present us with an order block, and then I would be back to trusting something to possibly enter to the downside. Now that we've broken through the levels I've mentioned, if I'm having conviction in what I've been talking about, the only way I'd be able to kick back in line with that is if we start presenting ourselves with something like that, like these consecutive up candles turning into like a bearish order block. Right now we have these highs. Let's go observe what it looks like on these. So it looks like we may end up having an SMT between the S&P and the NASDAQ, as well as the Dow. So we look at the lows, there's no SMT at the lows. Right? It basically, all of them have came down and swept out the lows. They've all retraced, right? They've all had like this weird little pause effect, especially the S&P. And then the DXY looks like it's wanting to, or the DXY looks like it's not ready to do much. It looks like we're in an indecision candle in the hourly chart. It hasn't really done nothing. Something to consider though, the 650 macro pushed price lower, and then as we completed the 650 macro, 650 to 710, prices then pushed higher. Right, so you can see the difference in delivery when you're inside of a macro. But then again, sometimes it still acts like a fool. Right? You have to have the skill set of being able to say, I'm going to wait, but you also have to have the understanding of why you're going to wait, which is pretty much what we discuss a lot of times in these calls. There goes DXY, right? Still pushing higher. So knowing what I know, if I took a buy and I see DXY doing this, I'm nervous. Because if DXY is rallying and indices are rallying, at any given moment, that means that the indices can sharply turn against you because everything's interconnected. So that's a reason why you do not push when certain things are out of alignment. So there is an order block here on the S&P. It's also a new week opening gap from March being used as support. There's also now, like I said, SMT at the highs. So again, if DXY continues to rally higher, we now may be approaching the moment where things decide to fall. All the stuff that we've seen, intermarket relationship wise, again, it's signaling the fact that this goes higher, that means DXY should go higher. That's why DXY has strength. That's why it's not allowed to go down right now. That's why it's not falling. You know, it doesn't have the capacity to fall. That's why trusting bearish indices right now, or even bullish indices right now, it's rough, right? Because things are not fully lined up yet, and if DXY is rallying, it's really rough to try to buy indices, because if you're doing that again, you run the risk of it completely changing, because the intermarket relationship fundamentals has to do with DXY. If it's rallying, the indices are going to fall. That's a risk off scenario. They're unwilling to put risk on these assets, but they're willing to put risk on the DXY. Risk off means DXY is going higher. Risk on means DXY is bearish. And this is totally disrespecting that school of thought. All of them are rallying at the same time. So what does that mean? That's one low probability perspective. So again, we see DXY so strong. If we start to see swing lows break with the SMT that we've painted, right, things again may kick back into formation to end up favoring the overall bias that we have basically determined. Freaking ads. And now we see a sharp drop, sharp rise. You see what I'm talking about? Do you see what I'm saying? Sometimes it takes a little bit of time to really see the validity to things that some educators say. All right, but this is why I said I'm not trying to buy. I'm not trying to buy. I'm favoring what I'm favoring, and I'm waiting and waiting and waiting. Here's a beautiful example of why I say the things I do. Right? Why I'm able to stay away from losing trades for the most part. I still lose, obviously. But I very much focus still and have focused for the last 4 years on how do I make it so I stay out of bad situations. And the experience you've had, although this may have been a bit more boring than people want because everybody wants to take an entry every 5 minutes, this whole experience is a vitally important factor. It's vitally important because think about it. If you would have taken a buy here going against all the things that I've been saying, imagine. You'd have been like, damn, I should have listened to him. Well, yeah. You know, it is what it is. So there's our bullish DXY. Again, all off the heels of what we've been rooted from, or what we have rooted from understanding the bonds and the yields and the impact those have across the board. Hope a aha moment flicked on in your head after all the stuff that we've been discussing today. Again, even though it's a little slower session, it's to be expected. It's the end of the month, right? But again, we are now still respecting price running up above these highs to position smart money to sell, to then try to offset their positions down below these lows if it is going to have any excitement, which it may or may not, because it's the end of the month. But again, I'm favoring sells, right? Our contingency plans were in place. We did have something happen that we didn't really feel comfortable with in terms of like this high breaking and, you know, price continuing to do what it's doing here, or what it did here and rally up so far. But yeah. Now again, although it made this little jolt lower and DXY expanded aggressively higher, I still need to see things fall in line. And if it doesn't, like it's doing here, I'm still not interested. I'm not interested in buys or sells right now. So DXY has reached into this fair value gap, but we have not had, given the DXY aggressive bullishness, we have not had anything to capitalize on using that relationship between DXY and the indices. Because the question is, for 99% of people, how do I trust my setups? How do I get in and not be stressed out? How do I have faith in the things that I'm doing? Well, first of all, it's going to have to do with patience and paying attention to a lot of the details we've discussed today. It's not just a model. It's not just, you know, some magic bullet, okay, that'll make you trust the setups. It's having a deep understanding, right, of how the markets work together, what validates and invalidates a level or a particular idea, and understanding the overall markets as a whole, how they're all connected, and what that relationship looks like when things are healthy versus when things are disjointed. Also understanding different times of the week, times of the month, times of the year, and how those things impact the delivery and price, which obviously is, for those that know or who spend a lot of time with me or ICT, that has to do with seasonality, right? That also has to do with daily, weekly ranges, the characteristics each day has within the weekly range. But that also obviously aligns with Power 3, right? How the Power 3 principles work and how that also impacts price. Excuse me. So yeah, now we have this fair value gap. Again, what is DXY doing? Is there anything confirming trust or promoting trust in a particular idea? This may go higher. Is there any further details to trust this besides the fact that it looks like it's going to go higher? In my opinion, not so much. So am I going to put real money on here and risk my livelihood or money to pay my bills because I have a hunch thinking that, oh, well, there's a fair value gap. I'm just going to willy-nilly wing it, okay, because I feel like it's going to. I've been sitting here for 2 hours. No, I'm not going to do that. It's just not how a professional operates. And trading obviously takes patience. So with this low high, I would really like to see us break through this low, respecting this upper portion of this 8-hour fair value gap with DXY continuing to rally. We did see an S&T here. But again, when we have S&T, to justify the S&T or to confirm the S&T, we got to use DXY. DXY is sharing information with us that we should be bearish. We should be going lower. There's S&T at the highs also. There's also, again, S&T at the lows. So there's two S&Ts. So which one should we trust? Well, you go to the DXY. If the DXY is rallying, the bearish S&T is likely to hold. If the DXY is bearish, then you trust the bullish S&T if there's two S&Ts. Right? That's how that works. When you have multiple S&Ts happening in a moment, DXY is your best friend. Sometimes. Alright, so let's see. Maybe we set this swing low here. Maybe DXY continues to press on higher. Bonds continue to go lower. Yields continue to go higher. And then maybe it'll set up some type of a YouTube model opportunity for us to go lower. If it doesn't, we wait for it to get down below here. Then these consecutive down candles become a breaker. I mean, you could even use this. We preferably would like to see it stay below this if it breaks this low. And then again, our target would be offsetting the buy side run and potential smart money entries to short. We'd offset that at a willing sell side liquidity pool. Or you could even take, if you can get into something here, you can take it as low as short as here. All right, whatever you're comfortable with. And aim for, 10 to 20 points. Or 5 to 10 in the S&P. So again, most of the things that we've discussed today also coincide with the fact that, or the topic of knowing when to trade, right? Because that's a big question too. When do I trade? When should I trade? When is it high probability or low probability? When you see things like this, DXY is aggressively moving higher, plus the indices are moving higher, while the bonds and the yields are showing it. DXY should be going higher, and it is, but that should coincide with the indices dropping. So this is heavily manipulated because everything's going in the same direction. That's just not how this is supposed to work. So guess what that means? That's a crack in correlation. Now, is a crack in correlation justification for high probability or smooth price delivery that's, easily determined? Is that recipe for smooth trading? No. Is it a recipe for you to trust whatever entry you get into? No. For me, no. like no. I've gotten burned so many times doing things like that, going against the fact that I clearly see things are not lining up how they should. And I paid the price for it, especially the first year. I lost 12 grand, felt like a total failure, felt like this was impossible. But that instead of making me feel like, oh, I gotta quit or I'm never gonna be able to do this, it made me think, okay, well, how do I get on that other side? How do I trust things and learn when not to trade? What signals in price will help me trust things so I don't feel like I'm being manipulated and just totally broken, right? And all the things we discussed here and all the lives that I've done this year since I started doing them has a taste in the mindset and different things that I've had to discover and master to be able to answer those questions. How do I trust the entry? How do I trust bias? How do I call bias? Right? When do I trade? When is there high probability or low probability? What's the difference? This is a beautiful, high resolution, easy indicator for identifying high or low probability. If all of them are going in the same direction, automatically, especially at the end of the month, automatically, it's low probability. Why? Because the market's not symmetrical. Or if this is happening, but all the two indices aside from the nasdaq, maybe they're all doing their own thing. One's consolidating, one's declining, one's rallying, but DXY is following one of them, or one of them is following DXY. That is a crack in correlation. It's not symmetrical. So automatically it's low probability. Very, very easy filter, very, very easy filter to identify or start to go about identifying high versus low probability. See, so now we got this swing low here. If DXY does continue doing what it's doing, if the bonds continue to fall, yields continue to rise, if we shift the market structure below that low, so now we got SMT at these highs here. Right? If we get a shift in market structure here, the NASDAQ is looking like it's the stronger of the three. But again, if we get a shift in market structure, this may be an even cleaner market maker sell model if DXY continues and everything still follows suit with this previous week's high being the draw on liquidity. As we mentioned from the very start, did I switch and say at any moment that we are going to for sure not be bullish? Have I changed that perspective at all in the DXY? Have I said we're going to reach this low instead? Not once. It's been fully aimed at this with what's happening, and we've been waiting for the indices to get in line with that. Because it hasn't, because we're following our rules and being disciplined and patient and not beating ourselves up or thinking we missed a move or talking a bunch of crazy shit to ourselves, because we're not doing that stuff, we saved our account. For those of you that have been here since the start, for literally probably almost an hour or 2 hours, I commend you for seeing the value and just seeing that this is in fact realistic. Like, this is reality. Like this is what needs to be paid attention to, because it's not always about taking 500 entries just because you want to take an entry. It's about that mindset. It's the cultivation of a proper mindset to actually have the patience to sit here and observe what price is telling you and learn the principles that are needed to have high probability, to develop the trust, and to actually become a profitable trader. Because this boring stuff, dealing with circumstances like this, understanding how to operate in this type of environment when things are doing what we've seen them do today, that will make or break you. Because it's, again, not how much you make. Anybody can make money randomly. But if you want to be consistent, there's things you have to pay attention to and be aware of. Because this is war. And there's probably a lot of casualties that happen today. You know what I mean? So, and yes, there was opportunities to buy. But again, there wasn't enough intermarket relationship, trust, and there wasn't enough things for us to, or for me personally, to want to change the overall perspective. And guess what? I'm okay with that. You should be okay with that. Because being okay with this type of scenario, this type of situation, is going to ensure that 5 years down the line, 10 years down the line, you'll still be here and you won't be easily beat up by not getting to enter a trade, or, you know, missing setups, or when things don't work out for you all the time, or when things seem a little more difficult. You won't be destroyed like most people, because you'll understand this is part of the game. I know exactly what I'm looking for, so I have nothing to worry about. Things didn't align with what I wanted to see. I held convictions, because bias doesn't change every 5 seconds, or overall narrative doesn't change every 5 seconds. And I waited for my chance to strike. Snipers in the military don't just start shooting because they're so antsy to go get that headshot. They gotta wait or they're gonna blow their cover. Well, guess what? If you don't wait for things to align, you're gonna blow your account. Okay. So, I mean, the parallels are pretty intense. You know, so... So yeah, now guess what? We wait till 750. And now we're going to see if there's something that can present itself there. So again, there was this SMT here, but you got to ask yourself in that moment, which is right here, look at the left side of the chart, look at the right side of the chart. There was an SMT there, bullish. When it comes to trusting your SMT, you have to use a DXY. Was the bullish SMT between the indices confirmed by a bearish DXY? No. So what does that mean? That means that is not high probability and it's not to be trusted. Did it still deliver, although that was the case, that it had the situation where it wasn't to be trusted? Yes, it played out. It does do that sometimes. But again, are you going to be a gambler? You got to ask yourself, are you going to be a gambler? Or are you going to actually use repeatable logic because you want to be here in the next 10 years? Right? That's the battle you got to have with yourself. Is the excitement of making or of taking a trade going to overpower the actual way that you have to perform to make sure you can do this consistently and trust this income? That's the conversation you got to have with yourself. It's not always an easy conversation, let me tell you that. But you'll get it eventually. You'll beat it into yourself, even if you got to blow your account 500 times. I know I did. I had to have blown, like, I can't even count how many accounts I blew in the first year. But I'm stubborn, so I needed that. I had to have that. Otherwise, you know, I wouldn't have learned. Hopefully you guys don't have to deal with that. Hopefully you don't have to put yourself through that, because it's rough. And if you have put yourself through that, really pay attention to what we've discussed in this video, as well as all the other ones. Because the perspective I try to share comes from a place of oh man, it was a place of darkness, hard. Like when I first started trading, my life was not calm in the slightest. Like it was chaos everywhere I looked, and I had to figure out how to calm the situation. And trading, well, the reason I love trading so much is it's so demanding mentally that you just ignore everything around you. At least, you know, if you let it, it'll take over and not let outside things interfere. You know, because the goal, what we're trying to achieve, you know, it's very hard, but it's very rewarding. So it's, you know, trading's kind of like a therapy, at least for me and some people I know. Some people it's freaking chaos, right? But you got to get it to the point where it can be an asset to you, and it's fun. You know, this is fun. Maybe boring to some, but watching the different validation principles, watching invalidation, watch how price does or doesn't do what we want it to do, and observing what we could have learned, and you know what was there that we didn't feel comfortable with. You know, all this different analysis. It's fun. At least for me. Maybe I'm weird, but it's just it's fun. And when you do get it right, after all these things that you've learned and you see everything dovetail together, and then you consistently see it perform, and you also see, like today, how it protects you when you know what's going on, you have much less fear, and you feel relieved that, wow, like there is a method to this. It is repeatable. I can do this. And then you're bit and you'll never let it go, no matter what you do. But to make it a funner process, don't blow your account. Be calm. 1 to 2 trades a day. Focus on your model. If it doesn't show, you don't take a trade. You know? And just be, you know, treat it delicately. And treat yourself delicately too. Because this is the hardest thing to learn that you'll ever learn in your life. Because the enemy and the friend and the companion you need is the person in the mirror. You know, and that inner conversation. So you got to cultivate that inner conversation with knowledge, proper knowledge. Maybe surround yourself with people that are supportive. You know, don't include people that aren't supportive, right? And, you know, continue to realize that your money and the trading approach you use is not the asset. You're the asset. So don't screw the asset up. That the actual important asset, don't screw that up, right? Cultivate that, nurture that, because no one else is going to push the button for you. You know, make this mean something to you, and make sure that you emphasize how much you mean to yourself, because that person in the mirror is the one that's going to be with you. So yeah, I would like to obviously see at some point, given the fact that DXY is rallying so aggressively still, like we would like to see it fall. We have multiple levels now. Now we have a 2-stage scenario. Now we have a even better framework for the market maker sell model if it does come to fruition. Now we have first stage accumulation, second stage accumulation. Now this shift in market structure, if that was to occur from this order block, because this is the body of the candle on the 8 hour, this is the low of the wick. So this isn't the full range of the order block. Okay, this is the low of the wick of the order block, the bearish order block, and this is the body of the 8 hour order block. So it's not unreasonable for it to want to push through this. Of course, validation for this potential area to have been the sell got invalidated in terms of that moment, right? It's pretty interesting to see how DXY is still pushing higher. We're still looking like our previous week's high is still in the crosshairs as we are approaching the 750 macro. So prices basically ran all the way up, offered buy side, right? Offered a couple buys. But now going into the 750 macro, we're really deep inside the 8 hour order block, And we've also now created a more defined market maker sell model framework, which I personally like because I love the market maker models, in conjunction with the whole narrative that we're looking for price to be bearish, right? So now I'm not discouraged by price going higher when I'm looking for a sell. I want that because we're pushing into a further premium. If you're going to sell an item on the market or like a product to somebody, you want it to be at a higher price so you can get a larger profit than what you tried to buy it for. So the deeper we can go into the buy side, while still being valid, of course, in this case, it is still valid because it's an 8-hour order block, the better. Because then when we crash lower, we're going to have more opportunities to possibly enter our setup, to possibly pyramid our setup as we try to dig lower if everything stays valid to go lower, which in this case, our underlying fundamental like driver of the marketplace is confirming that idea. So that's why we trust it. That's why we don't change our bias every 5 seconds, because this dictates what's going to happen. This is rallying aggressively. The yields and the bonds are falling, confirming heavily that this is a bullish DXY. So we have to see this fall in line. Looks like the S&P may be the actual one looking to fall in line with that quicker or more clean than the NASDAQ is. This is a YouTube model right here. Run on stops, shift in market structure, fair value gap, stop above this candle here. Not financial advice. But it looks like that's the cleanest sell, the possible sell setup that we've seen so far. But we'll see if that's gonna hold. Ideally, that's what I would want to see. So let's see, we also got an order block here. So let's see if we break down below that low. Let's see if price is going to hold that. See if the XY is going to continue. Oh shoot, oops. So we're at, I'm not sure exactly what this box is. Let's go try to discover what that is. Okay, that's a fair value gap. Okay. So yeah, again, we have this weekly low here that looks pretty nice. Previous week's low. But again, we are inside this previous weekly range here. So we just got to see how that's going to react. So I did take an entry because we are ahead of the 750 macro. I took an entry here, right as price went higher into this fair value gap. My stop is above here, and if I get stopped out, I will not take a trade the rest of the day, because everything is looking like it wants to justify potential sells in the indices. We've reached a beautiful level, and if it's gonna take off, it should take off around this this area. And if it doesn't, then obviously it's not a condition that I'm fully going to be interested in. So yeah, DXY ran up. It didn't really give us any type of usefulness up until this very point in terms of sells. So again, if this does not take place, this is a beautiful YouTube model here. We've shifted market structure, ran off buy side liquidity beautifully, a nice level of liquidity. So smart money is going to sell. They're going to likely sell inside this area because they've now triggered out liquidity, and now they have beautiful order pairing that could be done down here. And the NASDAQ looks less clean than this, which is why I shifted over my perspective to this. And hopefully there she goes. Again, this is not financial advice. I'm not here to get you in trades. I'm here to share things from an educational perspective. What you do with your money is not my responsibility. Okay? Okay. But yeah, looks like things are still going to validate. So again, am I sitting in the trade thinking, oh my God, I'm going to lose. Oh my God, when is it going to stop me out? Oh my God. No, I'm thinking what is going to continue to validate the setup? We have this high here. Hopefully that holds. DXY is continuing. We have this fair value gap. And then we also have this order block here. So we want to see, is that going to hold? If that starts to get disrespected and this doesn't want to continue to present us with opportunities to go lower, I mean, I do see us having a potential to get one more punch up here, which may happen. Yeah, I didn't notice the equal highs here. I should have zoomed out a little more. But you know what happens. Once we get up above this high, that'll actually hit this fair value gap. So I really, really like that. But then again, now we have to reset. Right? We have to reset everything and have to find this same opportunity, something similar to this, take place once price got up into this level. So now we got SMT between the NASDAQ and the S&P. It's like one, not even a tick. Not even a tick to stop me out. It's crazy how precise these indices are versus Forex. It's insane. In Forex, if you're one tick or one point or pip or whatever away from the stop, they will increase the spread and take you out. Like almost every freaking time. It's never like this, where it's like literally one tick, not even like half of a tick. It never is like that in Forex. And now we wait. It is a bit risky because of what I just pointed out, with this being left. Right? If I would have obviously known that, I probably would have waited. I don't like to sell when there's equal highs. I don't like to buy when there's equal lows, because it runs the risk of price punching up one more time to then take that out. But we shall see what happens. Looks like it's still continuing. Looks like everything's pretty much doing what we want it to do. And then again, we also have SMT here, which kind of justifies why I feel like it may not want to run up there. We have this nice SMT there. So that should justify the position holding. Yeah, they've been moving well all freaking morning. Freaking bonds and yields. But it's been in line with the DXY. It's just the indices have been heavily manipulated to not follow suit, which is why we've waited all the way up until right now. Now we're inside of a macro, the 750 macro. So hopefully, because we've been bullish, because there's the SMT, because, like you said, everything's moving in line with what we want to see. Hopefully now is the timing for us to drop lower. And that's why, the entries are taken when they're taken during macros, because we want to see this. We want to see acceleration. I'm not 100% sure if there's any earnings coming out. I'm not sure. I know that hella earnings have been coming out. I probably should pay attention to that stuff more, but I only pay attention to some heavy hitters like Nvidia and different things. There's probably others I should be paying attention to as well, but it is what it is. All right, so what are these lines here? These are first partial, second partial, terminus. Any of these can be your target. You don't have to have the mindset I have. You can aim for whatever you want to aim for. So bonds are falling, yields are rallying. As we've been discussing, it's translating to DXY aggressively attacking our drawn liquidity that we've had all morning, which has been this previous week's high. That has not translated cleanly in the indices until just now. And even now, it's still kind of being hesitant. It's still moving kind of slow, like it doesn't want to move how we want it to move. That's just obvious. It's just something to consider when you're trading at the end of the month. You always got to consider this. You always got to keep it in mind. There's different times of the year that things can be a little bit shaky. And part of that situational awareness has to do with the beginning of the month, with FOMC, NFP, so on and so forth, and the manipulation. And then, of course, the end of the month, which has to do with the end of the range, of the monthly range, as well as price potentially not really doing much because they're going to save it. Oh, they're just going to hold price because that's just what they do. Right? So again, when I entered this, I pointed out the fact that we do have these equal highs here that could be a red flag and be a cause for this to end up in a loss. Which is why I don't like trading when there is equal highs. Unfortunately, I didn't point this out before because I didn't see it. I didn't zoom out enough. But that's why you always got to zoom out, right? Selling when there's equal highs above you is a bit risky because it could easily run up and attack that. Reason I haven't closed the trade is because we have this SMT here between the NASDAQ and the S&P, showing that the S&P is the weaker of the three, or alongside the Dow, which is weak too. Which gives me, a little bit of inclination that we have a possibility of not coming up there, because NASDAQ has done that and gave us the S&P or SMT. So there's a reason to possibly see it not go up there. But if it does, right, that's just going to show why we don't buy at equal lows or sell at equal highs, because people are thinking that that's strong resistance right now. And now that the entry that I took was basically right in here, kind of put me in the pool of potentially getting broken like traditional support and resistance traders, which is why we don't buy at equal lows or sell at equal highs. But mistakes happen. But I'm gonna still have conviction because, like I said, we got that SMT and DXY still rallying. So yeah, and we've already taken buy side here. So we'll see if they want to continue just to drop. Seems like they will. To prove I entered, there's the entry. Top step. Not a demo. We don't trade demo. Not that you shouldn't trade demo, but I don't trade demo. It's always either Amp Live personal account or my Top Step account. So yeah, let's see if DXY has enough juice. See if, it should, because of the interest rate markets. They are looking pretty beautiful. Almost didn't adjust my stop, Jesus. Yeah, this is a beautiful indication of bearish indices and bullish DXY. You want to know how to solidify either bullish or bearish DXY? Look at what this is doing. Study what these are doing, because again, these are the fundamental drivers behind why price does what it does in the DXY, which then obviously correlates to what happens in the indices. There she goes. Let's see what happens. So now we're back to the low of the 8-hour order block. So yeah, we want to see this respond lower from here. It's also the upper portion, kinda. We're still kind of holding between this fair value gap and this 8-hour order block. So we want to see, because we traced all the way back into half of the regular trading hours gap, back into this order block. There's SMT at the highs as well. And then we also saw SMT at the highs here, which is inside of this 8-hour order block. So, with DXY being bullish, with the bonds being bearish and the yields being bullish, we should be able to see this go down and then DXY go higher. But again, if it's shaky, if it doesn't deliver cleanly, it is pretty slow. But if that continues, you got to consider, what part of the month is it? it is part of the month that could be a little problematic. So yeah, we could smash down below this. We got equal lows here, so that makes me feel like, yeah, we're probably gonna go. It's probably gonna have a nice push through that. DXY is still pressing on higher. So we go to the currencies, they're still pushing lower, confirming as well. So yeah. Hope you all have enjoyed this session. I know it's been a little bit of a longer one, but I hope you guys have learned some stuff, kind of saw how you should be operating in the marketplace. So yeah, I ended up taking profit right at that first liquidity target. It's like 6 points. Right here. Why? Why didn't I just hold it to come all the way down to there? It is the end of the month. I have no need to make more than $350. Like, I mean, that's more than I've ever made in my job. So, I mean, I'm not here to squeeze every cent out of the market. I'm here to be consistent, make money, and be consistent while I'm at it. Right? So, now we get to sit and watch. See, is this fair value gap going to hold? Is it going to push price lower down into the rest of the sell side? Right? But could that have been a pyramid? Is it going to present a pyramid? Is DXY going to continue being bullish? Or is it going to now retrace and then turn price around? Because that's a risk we're taking. Because of how aggressive DXY has been, how little the response has been in the freaking indices. Right? So yeah. And again, just because I said what I said in terms of me exiting a trade or me entering a trade doesn't mean you have to do exactly what I'm doing in terms of how I manage it, in terms of profit taking. Right? It's totally up to you what you choose to do. I have no shame expressing when I want to take profit. The final TP is below this low. But on the way there, if you took an entry similar to what mine was, the first TP's here, second TP's here, third TP's here. Why? Because these are all swing lows that have liquidity. From here to here is 5 points. Just a little bit below that with what I got was 6.5 points. Right? Because of how crazy the relationship has been and the fact that it's the end of the month, my justification to exit at this area was just that. But again, I outlined these three levels. It's always 1, 2, 3 TPs. Generally, especially if you're new, you want to prefer to be consistent with taking the first TP. But again, as you grow into things, right, depending on how much you're trying to make, like I'm cool with making $300 a day. Every time I sit at the chart, if I can make at least that, I'm solid. That's more money than most people make sometimes in a week, sometimes in the world we live in, $300 in a day. Some people make that in a month, right? So it's like in America, I kind of have to make sure that the threshold is a little bit above average, because it's freaking expensive, and our dollar's being devalued, of course. But that's besides the point. But yeah, it's really up to you. First TP would be here, second TP's here, third TP would be there. And yeah, I hope it made sense in terms of my justification for why I took the exit here. Not only my normal goal is hit, $300 a day. I got a little bit above that. But then of course the second TP's here, third TP's here. But again, the justification is it's the end of the month, okay? And things have been a little unhinged. So it's a little more risque to try to hit a home run. And again, that's not to say that it won't happen, right? But I have my goals. I'm shameless to take my goals when I achieve them. But obviously, there's further things you can do. But it's up to you, right? I let just like how ICT lets us make our own processes, right? This is your opportunity to select which one you'd feel comfortable with, consider what I've said about the current conditions, and act accordingly, right? So yeah, appreciate the question, brother. Notice how we waited and waited and waited and waited and waited. The only entry we took that I said I'm getting behind played out. All the opportunities that we apparently missed, right? For those that are new that popped in, hearing all the wait, like the whole conversation of, oh, we should wait, we should do this, we should do that. I'm not going to enter, I'm waiting for this. All that conversation led us to hitting a beautiful, perfect entry. And again, if I would have thought when this price went up, oh my God, I missed the move, oh my God, and start freaking out, I would not have had clarity to enter this, or trust, or the mental fortitude to get into it, attack my target, and be solid. Because if I would have taken a bunch of entries and lost, $300 doesn't really sound that good now, does it? Right? So I knew exactly what I was looking for. I needed to make sure my model was in place. My model was in place. You can also look at this high, this low, this failure swing, creating this SMT. This last down candle is also a mitigation block. So there's another model you could have taken an entry on. Right? I'll go throw this in my journal real quick. I would have liked to been able to take freaking NASDAQ. It just didn't look as clean as this, as the S&P, and that happens. And the NASDAQ made the higher high, while the S&P made the lower high, which translated to the S&P sliding a little more aggressively. Although the pip counts or point counts not as much, overall price delivery it's always going to be cleaner if you're looking to sell the lower high versus sell the higher high, because the higher high is showing underlying potential strength in the SMT that is between three correlated assets. See, so I could have held it and got 10 points. All right, but I was cool with 6. beautiful 2-to-1, a little over 3-to-1. Oh, damn. Yeah, see, with DXY doing this, if I was still in the trade, I would have exited right now. I don't like seeing when things, we've been really, really bullish here. And then if DXY now turns and tries to now retrace, maybe that kicks the yields and the bonds into a retracement. That would basically come back and eat up our profit. And I would be kind of pissed off that I didn't take the money that was offered. So you're going to definitely want to, if you're in the trade still, again, I never told you to get in. You made that decision on your own. If you were to have hypothetically took this trade, you would basically have taken profit here, given the fact that DXY gave this drop. Right, along with all the other things, the end of the month, all these different things. At least that's my advice. Right? Because again, the goal is to be profitable, not to hit the largest trade. Because the ones that are out to try to hit the largest trade and force their max TP generally are the idiots that don't live the lifestyle they say and are just trying to lie to get attention. But you know, they have people like me and many others that are more than happy with being consistent versus trying to look like they're the best trader on the planet, right? Which ends up biting them in the ass anyway, because you can't keep up 500 points a day, right? Like that's like almost impossible for someone to manage. Even 100 points a day, even 50 points a day. Sometimes you won't be offered 50 points a day, and if that's the only thing you aim for, the days that doesn't occur, you're going to take a loss, and that's going to be a lot of the time. You know. I heard something the other day. It's much more attractive and manageable and profitable for someone that gets 0.5% a day but has like an 80% win rate and does it consistently versus someone that hits a 50 to 100 point move maybe once a month, right? And tries to aim for 100% or 200% or 50%. The person that gets that 0.5% is going to be slow, steady Eddie, and have a much easier time being consistent and actually depending on this versus the other person who's going to be on a reckless, wild, roller coaster, who's going to have a horrible time and face a lot more adversity. Yeah, again, I want to thank you guys that have been here for the whole time. I really appreciate it, and I hope you guys got value from everything we've discussed. I'm probably going to close the live in like 10 minutes, but we got what we came for. Avoided bullets like the Matrix, right? Dodged the opportunities that could have resulted in chaos, and got a headshot. So So, do you guys have any questions before we close the stream at 8:30? And then tomorrow, I believe, yeah, we'll be up bright and early. We'll probably go live again on YouTube. Maybe we can sit through some of this too. Unemployment claims, as my private community knows, is my favorite thing to trade. It's always something interesting for the most part. And it's not too reckless. It's just enough volatility to get a pretty decent move. And then we'll probably have something nice for the price index here too. So yeah, every single day for the rest of the week we'll be live on YouTube. Now that we look at the freaking news. But again, just like the perspective we had today, it's the end of the month. It may kind of be shaky. We gotta look at it as if it's a, it's a high impact news event. That could be, a little bit shaky, could be a little confusing, right? A little disjointed. So you're gonna lower your risk, 1 to 2 trades, max, and just like today, we're gonna come in with patience. Be very patient. We're gonna paint the picture. Again, we still have the same mentality that the previous week's high is potentially gonna be attacked. Right? Again, it doesn't change. Bias doesn't change day to day. Narrative, the higher time frame narrative. Especially for a weekly analysis on the weekly time frame. Day to day, it may change, right? In terms of which liquidity pool we're going to target in conjunction with that higher time frame narrative, right? But we have to be rooted in some type of higher time frame level that the weekly chart's going to reach for, and then work within the liquidity as price moves towards that direction. But it grounds you when you have this perspective. All right, so we got the NASDAQ pushing up real quick. Let's go see. It's pushing up to now a premium. So remember that this is going to be a possible market maker sell model if we are going to continue going lower. This retracement here could just be to get price into this, and then it could offer, if you go from this high to that low, it could offer a potential YouTube or optimal trade entry from this high to that low. All right, you measure that out. We've come to a premium PD array. We have a logical target down here. And not only that, this is a potential accumulation, first stage accumulation, second stage accumulation. Here's a smart money reversal that offered the sell, first stage distribution. If price gets down into here, maybe you want to wait to confirm. Maybe you don't trust it up here and you want to see DXY turn around again. Well, wait till price gets down into here, and then maybe that'll offer a second stage distribution, which is generally the faster characteristic in the market maker buy or sell model. So just something to consider. If we look at the 3 minute, we could see it's pretty nice retracement. There is a shift in market structure. There was a run on stops. There is a higher time frame level we're using. So yeah. So see how it responds to this. It's not unreasonable for this to retrace, obviously. Obviously, that's translating to the NASDAQ retracing as well. It's not unreasonable. So yeah, we've been really one-sided. So again, it's not unreasonable for this to come down to then try to go higher. But we see these equal highs here, right? We've already taken sell side here, and that's jolted away. The bonds and the yields are showing us that this weekly low is actually a previous month's low. It's April's low. Or actually, this is the start of this month's low, May. Notice how price went up, manipulated to a weekly fair value gap to start the month. This is May 1st. Price rallied up and now created a drop lower. So it's monthly power 3. Price went higher, hit a higher time frame PD array, and now went lower for the month, the second half of the month. So that's a beautiful visual on how power 3 works on all time frames. The monthly opens here, price rallied up above the monthly open, after we hit this PD array above us, price has now dropped. It's also respected this weekly fair value gap here that we've had outlined for a long time. And this was equilibrium for the weekly range, this purple line. And then I think this one was for the monthly. Yep. And all of that got us up to a premium. So it opened here on the month, rallied up to a premium above equilibrium on the monthly and weekly ranges. And then price used the inversion fair value gap here and has slid. And we've been ahead of this entire delivery in my private community. I think I mentioned it a couple times here too. Yeah, notice how this was the daily time frame equilibrium. Price got below that in a discount and rallied. Now we can disregard that. Alright, disregard this low. Try to clean this up a little bit. Damn, it's hella windy over here by my house. I hear that shit banging on the wall. It's insane. DXY is rallying. Looks like the Nasdaq's going to present with a nice sell-off. If this continues, obviously, it's going to be a pretty nice sell-off, potentially down below this low. Again, Nasdaq has the higher high. So Nasdaq could be still a slow, choppy mess. But we'll see. We should have no issue if things are going to be in alignment to slide down to here using the 8-hour order block. Notice how it came and has used that, how impactful the higher time frame levels are. Looks like it's going to be beautiful to me. In this case, if I would have taken that entry at that fair value gap, I would take profits at this low here. Or maybe right before it. And you may ask, oh, why so quickly? Because we've already made money, and it's just cherry on top. That's a stark contrast between what these other people try to do online. Everyone's like trying to, oh, I'm the biggest, baddest, this and that. Oh my God. Yeah, well, show me a broker statement. Do you really trade full time? Or are you just a liar? And most of these people are freaking liars. Okay? They can't come out here and do what we do. It's a clown show. But alright, guys. So yeah, I did actually take that as well. Right? Just to add a little bit. Was it 17 points? But this time that one was on my AMP Live account. Alright, so with that being the case, again, I appreciate you guys showing up. We will be live tomorrow. For those that don't know, I go live around 5 o'clock Pacific Standard Time. So it's fairly early. A lot of people like to just get on at like 6, and that's okay. But mind you, I'm already online for like a whole hour already, breaking down the structure, what we're anticipating, and what we're looking for, so we can be prepared for when the open happens, and so we don't have to just jump up and start making quick decisions like off the top of our head right away, because it's a little rough because you're trying to wake up and all these different things. So I suggest anyone that can trade in the morning or tries to trade in the morning, suggest you try to give yourself a little time to wake up, because these are financial decisions, right? And we're not trying to be half asleep. And we got, when the open happens, we want to have a game plan already. And generally that's the most effective way to do things. All right. So thanks again, you guys, for hopping on. I hope you got some value. If you haven't already, definitely leave a like, subscribe to the channel. We go live every week. Last couple weeks has been a little inconsistent because I had a family matter I had to attend to. But yeah, we're back to it. I appreciate you, Nico. And so yeah, if you guys have any topics or anything, definitely let me know in the comments. And again, hit that subscribe button, support your boy. I'm out here trying to support you guys, and I want to see y'all win. So when you show up here, be ready to take notes. And yeah, I hope y'all get value. And I will see y'all tomorrow, bright and early, 5 a.m. Pacific Standard Time. And we're going to be live actually for the rest of the week. All right, so pop over for the rest of the week. All right, talk to you guys tomorrow.